of Investing Education Academy with myself, Brent Simpson, and my co-founder, Leon Noble. Now, today, some of you all have been wondering about ETFs. Are they profitable to invest in? Are they a viable strategy? And some of you all who have talked to us know that Leon and I sometimes differ on ETFs, but the numbers don't lie. And so today we're going to dive into the numbers and we're going to talk about ETFs, in particular ESG. If you have questions, please post your questions. We will answer them the best we can during this live. If you've been wondering about something and you've been skittish on doing it, asking us live, please do it. We've had some people contact us asking us questions later on of subjects we've covered live. So we urge you, just ask us the question. We will do our best to answer it. All right. So Leon, while I do some housekeeping, can you tell them why we chose this topic today?
Yeah. So this topic is, as Brent said, we're going to cover quickly ESG. And I'll define what that is in a minute. But the reason we're covering this is because, so as Brent and I have been preaching since end of November, we want to diversify our portfolios away from technology to an extent with rising rates like we have right now.
Speculative technology.
But yeah, right. Yes, thank you. Speculative and non-profitable technology, right? Because a lot of us we were in a lot of those deep in 2020, 2021. We made a lot of money. We did very well, but those days are about over. And just as an aside, today the Federal Reserve came out with their what are called their minutes that just talked about their most recent meeting. And I don't know if anybody's watching the market earlier, but the market was kind of down, sideways down earlier. Then we got a huge pop at about 2:00. And the reason was because the Fed came out with their minutes, and their minutes just basically reiterated what they said they're going to do. And the market took that as great. They're not going to go super, super, super hawkish, and they're not going to run in here and raise interest rates by like 1% come March when everyone expects them to actually start raising rates. So the report came out wasn't as bad as the market thought it was going to be. So the market popped by about 1%, which was great, because like I said, we were down most of the time. But so back to the point. So ESG, we're focused on ESG today because ESG is another way to diversify your portfolio. If you want to, like I said, we hope you've either already gotten rid of a lot of those speculative technology companies or the non-profitable tech companies. And like Brent and I, we're looking for things to take that money and buy. And I'll just an aside. So when I asked the expert this past weekend, and all IA members, if you haven't done so, inside the platform, inside the membership community, go watch this past weekend's Ask an Expert. Hot Seat, the IA Hot Seat. We're calling the IA Hot Seat ETF edition, where we put in the hot seat was an ETF, and we actually found 3 stocks that are crushing tech stocks right now. The lowest one was down. The lowest one was up 60%. The highest one was up 140% over the past 12 months. Whereas right now, technology as a whole is only up about 5%.
And Leon, let me jump in real quick. We're going to start for those of you all who have actually seen our hot seats. It's for IA insiders and above. And what we do during our sessions, we ask one of our members to volunteer to show us their actual portfolio. Again, I don't know too many places where, number one, the members are willing to do this, and 2, that they even have the wherewithal. But our members show us their real portfolio, what they've invested in. We go through and figure out why, how long, what price did you get in at. And every time we seem like we learned something new about a different stock that maybe we didn't know about. So what we did was we added a twist to it, and it's because of you all telling us what you want us to do. And ETFs keep coming up. So we decided to show you the portfolio of an ETF. And in doing so, it was mind-blowing that this particular ETF had several stocks that we had no idea existed. Very exciting, though. It was very exciting to go through that process, because I know as a result, I looked at investing in those particular investments slightly differently than I would have otherwise. And some I decided to research that I never would have researched because I wouldn't have known they existed. So if you are an IA member, we're leveling up. We're going inside these portfolios that are what size portfolios are they, Leon? Do you want to say the dollar amount that you enjoyed saying so much during that?
Yeah. So and just to add what Brent was saying, the beauty of ETFs and the beauty of us diving into them are ETFs are constructed and managed by Wall Street firms, the big boys, right? The one we covered this weekend, the assets that this particular firm manages is $4 trillion with a T, $4 trillion. So imagine the amount of resources and research they put into building this portfolio, building this ETF, and to put it out there to the world. Because remember, their reputation is on the line, right? So they're not going to research junk and put junk out there. So we're actually able to take advantage of professionally researched companies that are done by the biggest firms on Wall Street, dig into their ETFs and actually buy the individual stocks as well as the ETF. So what we did this weekend was we broke down a particular ETF. We showed its portfolio. Again, we're showing that's a professionally managed portfolio put on by a company that manages $4 trillion. And digging into that, we found, like I said, we found three. We showed the top 10 holdings of the ETF. Then we found three that were in there that are up 60%. The lowest one was up 60%. The highest one was up 140%. And as I said, technology right now, over the last 12 months, is only up about 5%. So, and the reason we're doing that is because we know the IA community, like Brent and myself, we're generally very, very heavy in technology. And this year, we know things aren't going to go quite as well as they have the last 2 years. So we want to find other investments that are not technology, but we can still get a good high return. And so that's what we did this weekend. So again, all IA members, if you haven't done so yet, please go watch the hot seat from this past weekend, and you will see some gems in there.
Yeah, and it's for insiders and above. So if you're looking, you're like, you just need to know that's who it's for. You can go into the group and see it. And before we dive into the subject matter completely, I want to wish my baby girl a happy 6th birthday. She turns 6 tomorrow. Super excited for her. That's it. We can get back
happy
to
birthday, Nadia. Yes.
We can get back to the regular scheduled programming.
So the reason we sold ESG today is because, again, we're looking for other investments outside of tech where we can diversify our portfolio. And I believe most people don't even know what ESG is. So I'm just going to give a quick overview. All ESG, it stands for environmental, social, and governance. And what that means is, so that ESG term is applied to companies that basically are doing socially good, right? Companies that are not harming the environment, that are doing well by the environment. Social, they're doing well in their community, maybe around the social justice thing, maybe around community events. And then governance means that they have in place stockholder-friendly rules and bylaws, right? So that typically means like the management doesn't hold all the, like, for instance, Facebook is known, like this is a known thing. Mark Zuckerberg, founder of Facebook, holds all the cards, right? Because he holds essentially all the voting shares. So Facebook can never be bought out. It can never be nothing can happen without Mark Zuckerberg's input because he owns the lion's share of the voting shares, the lion amount of the voting shares. So their ESG number it's not as high as it could be because of that reason. So their ESG number is lower. Not saying they don't have a high ESG number
because of the governance.
Yeah, because of the governance portion. Right. I don't know what their other portion is, but I know their governance portion is low because, again, Mark Zuckerberg holds all the power. A stock that has high governance would the power would be in the shareholders. So that's an example. So ESG stands for environmental, social, governance. Again, it just means the company is doing well by the environment, socially, kind of like in their communities or in the world community. And then governance stands for, they have shareholder friendly policies. But there's a big debate on Wall Street, right? So just as a number, just give it how big it is. Right now, $17 trillion with the T, $17 trillion are invested in ESG funds, right? So ESG is a huge space you may not even ever have heard of. But there's a debate on Wall Street where a lot of the old heads, a lot of the old guys, been on Wall Street 30, 40, 50 years, they're not a fan of, for whatever reason, they're not a fan of ESG investing, right? They look at it as, you have these hippies coming in or these tree huggers coming in and trying to change up Wall Street. And, we're about, oil and natural gas, and we've made so much money from that. And so a lot of these old heads don't really like ESG, where a lot of the younger generation does, because the younger generation typically cares more about the environment. So the debate on Wall Street is ESG really investable in, are people getting good returns, right? And so what we have on the screen here is a what's called a percent change or relative strength chart. And I have we have 4 different ETFs listed, right? So I'm gonna start at the bottom. So um, and the reason, so I'm gonna start at the bottom. So at the bottom I have oil and gas ETF. Reason I have that is because oil and gas is not ESG, right? Oil and gas are fossil fuels, right? They pollute the air, right? So oil companies, natural gas companies, even some drilling companies, they essentially have no ESG rating because they're polluters, right? But again, old time Wall Street, people that have been on Wall Street for years, they made tons of money in like the 80s and 90s in oil and natural gas, maybe in the 2000s. So they're like, oil and natural gas is the way to go versus ESG. Well, what we have on the screen here is a percent change chart, right? And you can't see the whole all the years. It's a 5-year chart, but I had to kind of zoom in to give you the kind of the point. But it's a 5-year chart going back to 2017. And as we see, oil and natural gas, the sector over the last 5 years has returned nothing, zero. If you bought oil and natural gas stocks back in 2017 through today, you effectively made no money. It's gone nowhere. So that's one. So oil and natural gas relative is zero, right? Next one up. And the reason I'm picking these, because I'm picking industries that are the exact opposite of ESG. Things that people, like I said, polluters. Or the second one we have here is like this is another ETF that invests in things like alcohol, gambling, cigarettes, things like that, right? Again, not ESG, because this is more on the social side, not really socially acceptable by some people. But this particular one that invests in things like alcohol, gambling, and cigarettes is up 25% over the last 5 years, right? That's a great return. As we know, the stock market generally returns about 10%, so this is more than double that. So that's can't argue with that. Now we're going to the top, right? At the very top, we have ESG ETF. Over the last 5 years, ESG, the industry has returned 95%, right? So this question of, is ESG a good investment? Because it's a bunch of hippies and tree huggers that want to change investing. If that's the way you feel about it, okay, great. But this thing has, ESG is a place you want to have your money, because again, it's returned 95% over the last 5 years, whereas things like gambling, alcohol have returned 25%. Still a good return, but ESG has killed that. And then things like oil and natural gas have returned nothing over the last 5 years. So,
one of the things you should know when you're looking at ESG investing, it didn't just start with ETFs. I mean, this is something that's been going on since traditional mutual funds, where people sought after. Putnam was actually popular for producing socially responsible investments very early on, like might have been early 90s. And also too, what happened is it's been like an explosion of what's called the B Corps. And if you aren't familiar with B Corps, you can look that up. And these are organizations that are similar to nonprofits, but not exactly like a nonprofit. They work in a space. And what's happening is a lot of those B Corps work in like the estate planning, and I would say institutional money space. So they're bringing these B Corps are socially conscious very often, and the monies that they're sending through their estate planning, and also for some of their philanthropic contributors, they only are allowed to invest in ESG type companies. So by default, their monies have to go there. And we're talking about when you're moving into endowment management, philanthropic giving, and some estate planning for high net worth individuals that are going to these B Corps for services. Their money's flowing directly into these ESG companies.
Yep. And think about ESG. So like, Brent and I always say, look at your sectors, your tech, your, retail, your healthcare, things like that. Thing with ESG doesn't take into account sectors or industries. It just takes into account how well they are doing with environmental, social, and governance. So you can have like a Microsoft in an ESG fund, but you can also have a Target in an ESG fund. Because again, it's not about really what they're doing as far as sector or industry. It's about how are they treating the environment, their shareholders, and society. Also the notion of Wall Street with a lot of the old heads is that they look at it as, typically, it's a messed up thought, but if you're like quote unquote soft, you're not going to make big money, right? If you're not going out there and running over people and just trouncing people to get that dollar, you're not going to make a lot of money. And they a lot of these old heads look at ESG as being, kind of like softies, like these, almost like, everyone gets a participation trophy, that sort of thing. But again, numbers don't lie, right? Numbers don't lie. ESG investing, the ETFs, the industry is up 95% in 5 years. No, okay, so another one point to make is right below that. People that can see this, right below that, we have another ETF, the S&P 500, which is SPY. That's up 90%, right, over the last 5 years. So remember, on Wall Street money managers' sole purpose in life is to beat the S&P 500, is to beat the market, right? And when they do that, they can go brag, to the world. They can bring in new money because they beat the market. Because think about it, if they can't beat the market, and you give your money to them, you're costing yourself money, because all you got to do for yourself is go out and buy the S&P 500 ETF, and you're good. If you go to S&P here is up 90%. If you go with a money manager, they only made 70%. You just lost, 25%. When you just went,
plus fees.
Yeah, plus fees, right?
And actually, plus fees, and depending on how you invest, you got to incorporate the tax equivalent yield. But that's a whole nother thing. Yeah.
So their whole game is to beat the S&P 500 for money managers on Wall Street. The fact that the ESG kind of sector industry is beating the S&P 500, that is huge, right? Because that's showing you that these Wall Street gurus, as they call them, they call themselves, are actually, a lot of them are actually wrong about ESG. ESG is doing exactly what they want to do every day of their life, which is beat the S&P 500. And if people that are seeing this, if you look at this chart to the far left, where the ESG and the S&P 500 kind of meet, it's been beating the S&P 500 by for the past 3 to 4 years. ESG has. Now again, you can't see all of it, but we'll post it inside the membership community. But ESG has been beating the S&P 500 really since about 2019. So and it kind of accelerated over the last 2 years, really since COVID. It's accelerated above. Now it's about 5% being the S&P 500.
So we got a comment. We have a comment in.
Go ahead.
And I like the idea of ESG, but the only oil stock I own is up 77% since I bought it. It's currently top return in my portfolio. So if you bought it last year sometime, you might have a 77% rate of return. I'm guessing it was in early 2021 or late 2020. I'm just purely guessing from the return. But when you're talking about a 5-year span, and we're talking about the collection of a series of oil companies, not just one, you're always going to have outliers, and there always are going to be ones that run, like even with the ETF we recently looked at, the one that was up 140+% was one of the top 3, and then below that they were up 20%, 10%, some were negative. And so it just depends. It's an aggregate inside of the ETF. And this is actually pretty good that you wrote this. You like the idea of ESGs, but the only oil stock that you own is up 77%. This is also what we said in the beginning, that when we extracted what we learned about the ETF, we started looking at buying individual stocks in addition to buying the EFT because of this reason. This is exactly what we talk about. Sometimes, depending on how you invest, you can pick a winner and it's going to outperform the overall ETF. But, ETFs are designed for a certain type of person that wants to invest. If another person wants to just, check to see, maybe I'm going to see how this stock performs, you did it. You beat the ETF over a 5-year period. And that's great. And that is what we talk about, it's different. Yeah. So the account will be 1 year old at the end of this month. Mm-hmm. You got it. Come on. You got to give it. That's pretty good. Like we predicted early 2021, and there you go. So we know the market, but anyway, thank you for the clarity. So I want to just clarify, if you pick an individual stock inside of an ETF, you can outperform or underperform the overall ETF.
Yeah.
There's no guarantee either way. Go ahead. Lee.
Yeah. Another point I make about that is, so you bought that oil stock at the perfect time. So the reason, so if you go back, if you look at a chart, go back and look at kind of oil stocks. Well, I would actually say oil ETFs, or energy ETFs. You'll see that literally they're top left to lower right. They're literally going down. Energy has been a horrible investment, really, like the last 10 years. It's been a while. Yeah, if you put money in energy over the last 10 years, you basically lost money. Now, what happened was, the reason why I kind of turned around was COVID, right? everything shut down 2020. Everything. I mean, everything else we know shut down. Demand for everything went to zero, essentially. Now everything is coming back. The demand for oil is through the roof because everything is starting back up, right? Factories are starting back up. People are driving again. Airlines are starting back up. So the demand for oil is through the roof. They can't produce enough right now for the demand. The same thing with semiconductors, chips, right? Everything went to zero. Now the demand for chips is through the roof because everyone's coming back online at the same time. So so yes, you picked a great time to buy, right? You kind of like nailed the bottom. But long, like we're showing here is a 5-year chart. And we can actually go out 10 years and it'll look even worse probably. But energy has been a bad investment the last couple of years. Now, how long will energy continue to go up? Who knows? Last year, energy was a top performing sector in the S&P 500. First time in, I don't know, like 10 or 15 years that happened. So this year it could be the same thing. It may not. We don't know. But generally, on average, over the last 5 years, oil, or actually the last 10 years, energy has been a bad investment. So kudos to you for buying when you did. But just know that it's not. It hasn't been like that really over the last, say, decade. So back to the ESG thing. Again, the reason we brought this up is because we're trying to bring some diversification to everyone's portfolio. So just do some research on ESG. It's a very, very viable investment category. Like I said, it's not about sectors or industries. It's about the almost like the characteristics of the company, how they E again, environment, S, social, and G, governance. So you can just Google. You can Google ESG. You can Google ESG and then a company's name, ESG and a company's ticker symbol. And a lot of times you'll get information on kind of their ESG score. But it's definitely something to look at. It's beating, like I said, it's beating the S&P 500 over the last basically 3 years, and it's crushing things that are not ESG, like alcohol, gambling, and then just totally obliterating energy. So something to look for if you want to kind of diversify your portfolio. Oh, and then with this, so what we're going to do inside the membership platform, we're actually going to list out the particular ETFs that we found. So the one for ESG, the one for, well, we know the S&P 500, the alcohol gambling one, and the oil and gas one. We'll actually list the actual ETF ticker symbols for each one. Just kind of cut down the research for IA members. So we'll post that tomorrow.
All right. So everybody, with that being said, I believe we've answered the comments that came in. And if you have comments that maybe you're watching a replay or you're listening to the podcast later on, you can go to IAPodcast.com and drop a comment. We'll do our best to respond to it. If you're in our group, you can go to the platform and drop a comment. Everybody somebody there will respond to it. And then for those of you all who are thinking, don't you all owe us something? Yes, we do. We owe you a stock pick and a stock pick, or crypto pick and a crypto pick, or stock and a crypto. You get what I'm saying. We owe you 2 selections of investments that we're making. One will be posted in the Facebook group. So if you are interested in figuring out what that is, a little bit curious, you can go to the Facebook group and see what we come up with. If you are a member of Investing Education Academy's paid platform, you can go into the platform and you will find not only the 2 selections from today, you will find the running list that we've had over the last year plus. So if you have any questions, put into comments. We will get back to you best we can. And for the people who mentioned that they are joining the IA Crypto Bulls, if you are watching this, thank you for joining. We are excited to have new members. And this is a drum roll. We recently received notice that our purchase of the beachfront property in Ghana is moving forward. So they have officially filed with the Lands Commission that we get our official documents to close out this process and have proper ownership of the property. So we are super excited to have the IAA Panthers, owning land in another country. That was a pretty big deal.
Beachfront at that. Yeah, exciting, definitely.
Yeah. So once we get the whole thing built up, the Panthers will be first to go, and then after that, we may be doing some trips and some things over to Africa to visit the property. So we got to get a house built first. But with that being said, stay tuned. We will keep you updated. And for those of you all who are in the platform, every now and then we post updates so you can see what's happening. You have anything for us, Lee, before we go?
No, just reiterate. Look at ESG. Google ESG. It is a I mean, like I said, the numbers don't lie. 95% the last 5 years.
5 years.
It's beating the S&P 500. It's beating energy. It's beating a lot of sectors, a lot of industries, and it's something like, again, it's a way to kind of diversify away from tech. Not totally, but getting rid of a lot of those speculative things, and maybe you can move in things like ESG stocks.
Yep. All right, everybody. It's a pleasure having you with us, and we are happy to deliver information. Don't forget, our goal is to demystify the stock market, cryptocurrency market, and other investments, so our